Good evening. Welcome, chamber members and audience and our Facebook attendees. Thank you for joining the Los Angeles Chamber of Commerce Finance Team webinar. This evening, we're um, we're, first of all, the finance team, we understand financial education is very important, and we hope you do too. Very important. So my name is Vernell Taylor, and I'm with US Bank under the Corporate Social Responsibility in the Financial Education Department. And our finance team will be hosting our financial panel. And now I would like to introduce our moderator, which is Karen Foster. She's our member as well, and she's an executive um, with the with Affinity of Investment and Corporations, and she's also a published author. I would like to introduce Karen. I'll give you the honor to introduce our panel one. Take it over, Karen.
Good evening, everyone, and thank you, Vernell. For the first panelist, we have Delphine Pruitt with US Bank and Guillermo Saade will also be speaking with Edward Jones. Starting with Delphine Pruitt. Delphine is Vice President, Business Access Advisor at US Bank, driving sustainable growth for Black-owned businesses. Delphine has worked in the financial service industry for 25 years, including positions focused on community, lending, and diverse strategies. Ladies and gentlemen, without further ado, we bring you Ms. Delphine Pruitt. And for our panelist questions, our first question for Delphine. Good evening, Delphine. How does debt impact your ability to get access to financing or capital?
All right, good evening, everyone. Thank you. And I'm really excited about today's workshop. And anytime I can talk about finance and education and being well prepared, I am always excited to do that. Before I get to the question, I just want to give a little bit background on US Bank and my role as Business Access Advisor and talk a little about our access commitment. I was going to see if Anna can just bring up, I have a few slides. I'm going to go through them pretty quickly. If Anna can bring those up for me, please. Look like it went away. Anyway, what I'm going to talk about is our, oh, here it comes again. Access commitment that was actually launched in February 2021. You just want to go to the next slide, Anna, because if you have to actually do. And this slide is really talk about who we are as a company. We power the potential of all our stakeholders. We like to say we power human potential. We do what's right. We power potential of everyone. We stay a step ahead. We draw through our strength and diversity, and we put people first. Next slide, please. This slide is very interesting because by 2050, there will be no racial or ethnic majority in the United States. It'll be majority minorities. And so it shows you where the demographics are going to be changing in direction in terms of growth within the US, where it's going to come from. And it's pretty much going to be minorities. It's going to be a racial ethnic diversity and at 33%, and then gender diversity around 21%. Let's go to the next slide. With our access commitment, US Bank, we're leading with the Black community. And the reason we're doing is this slide shows you that. If you look at the median net worth for whites compared to Blacks and Hispanics is substantially lower. As a matter of fact, for Black families, they are the lowest of all ethnic groups in terms of the racial wealth gap. And so we are now focusing on leading with the Black community to help them build wealth. And I know Anna's going to talk a little bit more about that later, but this is why our focus and this commitment came about, was actually looking at this graph here of showing how great and how wide the gap is between Black and whites. Let's go to the next slide. Oh, this is really interesting. Closing the wealth gap could result in additional $11,000 to $12,000 per American, and actually increase the GDP by 6%, just closing that wealth gap. This is what would happen if we were able to do that, which is, again, why we focus on increasing the wealth gap between Blacks and whites. Next slide. Access Commitment was launched in February 21. What it is really is a long-term approach in redefining how we work and support diverse communities as well as employees. And again, starting with the Black community. The commitment focused on 3 areas. One is supporting a business and community institutions, so working with Black businesses. The other is helping families advance financially and focus on home ownership. So access business, access home, and the last one's enhancing opportunities for our employees and looking at access wealth. And so those are kind of like the 3 pillars of our access commitment that we're going to focus on, and try to scale and sustain those efforts requires a different approach in working with the Black community. Next slide. I think she relied. This is just a web page we launched to get more information actually on the access commitment. I'm not going to spend a lot of time on that, but it gives you really details and action things that you can do individually to actually begin to build wealth within your family and with individuals. Next slide. Access business, that's my focus in terms of being a business access advisor. And it's focused on really providing information, connections, and capital to help Black small business owners sustain and grow their business. And we do that in 3 ways. Information is acting as a trusted guide to assist Black business to achieve their goals. So we have them navigate and get access to tools and resources to help promote sustainable business growth. Access to connections is focused on expanding networking and business development opportunities for business owners as well. And then lastly, access to capital is actually delivering responsible business and consumer products, within U.S. Bank and externally. And I think this is really important when I talk about access to capital. It's not necessarily that someone comes see me and as an advisor to them, I'm going to be looking at ways I can help them grow and sustain their business. It might be lending within the bank, or it might be lending externally outside the bank. And we work a lot with our CDFI partners, community development financial institutions, to actually fill those gaps as well. So my job is not just to go out here and say, we're going to do this to drive business to US Bank, but I'm here focused on the business itself and driving and getting access to capital to help them grow and sustain a business. Next slide, I think that should be it, right? And so in terms of how do I help folks with debt, those 3 pillars I talked about, information, connection, and then access to capital. Financial education is key. And so we might provide, I sit down when someone contact me, a business owner, or I'll reach to a business owner, and they want to get assistance from the bank. The first thing I do, we do a financial assessment. But I do that by just sitting down, talking to them, trying to learn as much as possible about their business. How they operate? What are some of your challenges? What are some of your needs? And then we get to the financial piece. What is your revenue? What is your cost of goods sold? What do you generate every month? And then that way we can craft a customized approach and plan to help them with their business. So, and that is really important because research has shown that since many Black businesses have had issues getting access to capital. Did you only use a lot of debt, which is really a credit card to operate, which impact their credit scores as well. So we sit down and look at the whole picture and then draft and come up with an action plan to get them where they need to be. Just last month, we launched our business diverse lending program, which is an overlay of flexibility and underwriting on top of our products, in which they can get some extra flexibility if you are a woman-owned, minority-owned, or veteran-owned business. And so that business diverse lending program is one tool we have to help more folks be able to qualify and get access to capital. But it really is taking a solid look at their financials and seeing where they are, where they want to go, and what they need to do to get there. So with me, it's never a no. It's like, it might be not now, or what we need to get you there. And then some people, it's just immediately going and getting access to credit and getting the capital they need to expand around their business.
Okay, and are we taking questions now or from the audience?
We can do some questions from the audience. If anyone has any, they can either put them in the chat or just raise your hand.
And so while we wait, now I see the time is coming up. One thing I do want to say that I think is really important that that with US Bank and the work that we're doing, really try to understand and provide those resources, really going to help their business grow. Right now, most data shows that the fastest growing businesses within the Black community are created by Black women. And so what kind of resources would they need that might look different from someone else? So I think it's really important that we create, is what I call the 3 C's, is cultivating relationships to help them be able to grow and sustain a business. The second C, I'll call creating an atmosphere and an environment where they feel comfortable to come into the bank and establish, a relationship with a banker who can follow their business throughout, and they can have access to someone who can help them navigate their process. And then last, I work on converting some perceptions of what coming to a bank is like. And I tell folks all the time when they come into the bank, you want to have a relationship with a banker. I think it's really important that you have that banking relationship, because at some point your business will need access to credit. And where you're going to get it from, a lending institution, a bank, maybe a CDFI. So I think it's really important that they establish those relationships early on throughout their life cycle, in their business.
I believe Vernell had her hand raised.
Renelle Taylor had a question.
I have a question. Sorry, I went in and out. Thank you, Daphne. Some excellent information, important, especially the wealth gap you brought up, and we want to continue that generation wealth and educating. When you mention resources, which is very important, especially for our small business owners, entrepreneur, how does one get the resources? Would they visit the US Bank site? Kind of explain a little bit more, or would they contact you? That information is very important. So I'd like to make sure that the audience understand how to get those resources.
Yeah, there's 2 ways. They can go to our access commitment website. And from that, they can actually navigate what resources they might want to get access to. Also, my information is listed on there. If they want to schedule an appointment and meet one-on-one, they can do it through that system, or they can just contact me directly. And then we sit down with them and provide access to those resources. For example, and I say this all the time, is that, and whenever I'm out, I don't know how many times I mention this, people don't know about it. There is a fund here in LA, the Black Collaborative Investment Fund. And that fund actually provide up to $50,000 in loan at 0% interest. And no one hardly knows about that fund. And that is a tool, a resource that can definitely impact someone's business and help them grow and expand. So there's other Pacific Coast Regional out here that does lending, as well. If you're starting a business, they do startups, So, and you have to reach Vermont Slauson. Economic Development is another entity. So there's a lot of resources out here that a lot of folks don't have access to. And my job and my role is provide as much of those resources to them as possible. Again, they can go to our website, US Bank Access Commitment, or they can contact me directly and schedule an appointment. And then we can sit down and learn as much about your business and provide the resources that you need. I had someone who came in and she needed a van. When COVID hit, she wanted to go mobile and do pop-ups. She she didn't actually come to the workshop. Her friend came to a workshop and left and found out that we do equipment financing, which is a car or a van. And in 3 days, she was approved for that equipment financing. In 3 days, she had a car and she's doing a pop-ups to this day. We were able to get her along. So it's a lot of different products and programs out here, and we just want to help you navigate that process.
Excellent. Awesome. Thank you, Delphine. I love it. Thank you. I appreciate it for sharing.
We also thank you, Delphine. That is awesome. We just have to do a little research and do our homework. We do have Lorraine McLeod. She has her hand up. Lorraine, you have a question?
Yes, I do. So Delphine, earlier in your presentation, you talked about how US Bank was very intentional in targeting or focusing on minority communities. And so that's their target. What I'm curious about is how have you seen that materialize in tangible ways? I mean, are there more loans being given to minorities? What are some tangible results of that very specific focus that US Bank has made their commitment? How is that?
Since we've and actually let me just since we launched it in 2021, I can actually I don't have it right in front of me, but I will put some of that in the chat, but we actually have numbers, how much we lend to, how many developers, because another part of this is actually working with emerging developers and developers of color who are building affordable housing. We made investments into those organizations as well too. We did a $25 million fund to fund women-led organizations that do micro lending. And so we would provide seed money to help them do that. But what I do, I'll put in the chat because I don't have that right in front of me, but I do have that information and give you since 2021, since we launched the access commitment, I can put in what we've done, year to date. And the numbers are quite impressive because we also expanding our vendors in terms of working our supplier diversity. How many millions of dollars we have actually invested in working with Black vendors, and minority vendors. So I'll put that in the chat, the numbers out, and all that's public, should be on our website, but I'll put that in the chat because they are extra tangible. I can tell you, for me, every day I'm encouraged and hopeful because every month folks are coming, folks are actually getting access to lending, but the most important thing they're getting is that they're learning and being transparent. What does it take? If you never went to a bank for a loan, you don't know what to expect. You don't know what to get. So a lot of times our perception, again, our relationship, meaning Black people specifically, has not always been good. So we explained that to them. I had a client come through and she said, well, we went to another bank and I didn't really like the questions that they were asking me. I felt like they were invasive. I said, well, what kind of questions did they ask you? And when she told me, I said, oh, this is what we call KYC, know your client. But we regulated where we have to ask questions and do screening to prevent bad players like terrorists or money laundering, things like that, that we held accountable for. So what I did said, these are the questions they're going to ask you. And so now I share that information with folks who come to the bank, open up a checking account, so they're not taking it back. These questions are going to be asked, but this is why. And we asked everybody these questions, and we actually are regulated by regulatory folks. You know, we have to do that. If we don't, we get fined. And you see articles all the time about people being fined $10 million, $35 million because they did not adhere to those regulatory guidelines. So it's things like that that are some cultural nuances that when you're engaging with Black businesses is different from other businesses. So the more I can educate them on what it's like to come into a bank, the more that I am transparent, and I'm extremely transparent about the process. I think the more they understand that and what it's going to take, I sit down like, this is what they look for. Why do we want to know what your revenue is? Why are we looking at your cash flow? You know, why are we looking at this? This is what this tells us. And the more I can educate them on that, when they come, they know how they're prepared. And when they come into a bank, they're ready to go. But I still say you should go talk to a banker, meet a banker. And if it's one you met where you're not connecting with, sometimes there's that connection. Go somewhere else then. Make the connection with the person you feel like you're connected to, who's going to invest in your business as well. And so I just encourage folks to do that. And don't be afraid of the banks. You know, don't be afraid of the bank. Bank's your friend.
Yeah, that was great information. Well, thank you very much. And I look forward to seeing the information in the chat.
Thank you, Delphine. Great information.
Thank you.
We have our next panelist, Guillermo Saade with Edward Jones. And I'd like to give you a little bit of history on Guillermo's background. He has a background in consulting, business development, and market research. He graduated from the University of Texas at Austin and holds a degree in chemical engineering and an MBA from University of Houston. Guillermo's words: after being a client of Edward Jones for over 9 years, I joined the firm as a financial advisor because I learned to appreciate helping people with investments as well as the firm's client-focused attention. Although I enjoy helping all my clients, my target areas are business owners and independent contractors who likely do not have the benefit of an employer-sponsored plan, as well as workplace retirement plans. My clients focus on building their business, while I focus on helping them achieve their financial goals. Besides getting to know my clients in such a way that I provide the most customized financial strategy for them, my other passions are travel, wine tasting, and community outreach. As such, I currently serve on the board for a nonprofit called Hands for Hope LA and support various other organizations. Ladies and gentlemen, please welcome Mr. Guillermo Saade.
Thank you so much, Karen. I should have kept that intro a little bit more brief. So sorry, it was a bit wordy, but I appreciate it. So I do webinars on different topics. I'm going to do a brief overview of a webinar that I did yesterday in its full entirety. And it's about the new journey of retirement, longevity, and it's based on a survey that Edward Jones did with an organization called AgeWave. And so I can go straight into the presentation or field the questions. That
Okay,
was
you can your presentation first.
okay. So is it I can host has disabled participant screen sharing. I cannot share my screen. Is it possible to share my screen?
Dexter, could you make him co-host so he can share his screen, please?
Can we do the questions for now?
I can just go over the questions. So one of the questions that was asked is, what are retirees' primary worries about longevity? And I'll go into this. So these are kind of broken out into, so one of the top concerns is physical health. And again, this is based on a survey of both pre-retirees and retirees. What are retirees' worries in retirement? So physical health. Am I going to have the health that I need to enjoy my retirement? Cost of healthcare, long-term care. So this is one thing we talk about with our clients is the benefits of getting long-term care insurance. Unexpected expenses. That's even beyond healthcare. Unexpected expenses such as, car repairs, house repairs, etc. Economic conditions such as a recession. What happens if a recession hits just as you want to retire? Another major concern is outliving your savings. So what does that actually means? It means that we live longer than our savings, right? We don't have enough. Another very important one is mental health. So this includes dementia. And as a side note, the company that I work for, Edward Jones, is one of the very, very large supporter of the Alzheimer's Association, because it's one of the most expensive diseases to have for the caregivers. So very important, because, and it goes into the next concern, becoming a burden on my family. So 21%, and I'm going down the list of percentages here, 21% said, well, I don't want to become a burden on my family. A lot of people don't want to do that in retirement. And finally, another important thing that people worry about is isolation and loneliness. This was extremely exacerbated by the pandemic. So I'm good. So just to go down this list: physical health, cost of healthcare, unexpected expenses besides healthcare, overall economic conditions, outliving my savings, mental and brain health. And these are separated. The yellow, let me just check here. So believe that the yellow is folks already in retirement. And this is folks already pre-retirees. So these are just concerns that people have, and they're very, very relevant, and we definitely share and discuss them with our clients. The next thing was what are the stages of the new retirement journey? So once again, I'll share my screen. This is kind of again based on this survey that the company did. So the 4 stages of the new retirement journey: anticipation. So 0 to 10 years before retirement. I don't necessarily agree with that because, for example, my wife and I are not going to retire in less than 10 years, but we are already in anticipation of retirement. So I think it can definitely be more than 10 years. Liberation, disorientation. This is 0 to 2 years after the start of retirement. And basically, this is where folks start asking, is this what retirement was meant to be? Is this, what do I need to adjust? Am I really doing what I want to do with my time, etc. Reinvention is where more financial issues come into play. So 3 to 14 years after retirement, this is where health issues start becoming much more prevalent, economic issues, as well as possibly the loss already of a partner. And then reflection resolution, this is where isolation, mental deterioration, etc., becomes a much bigger issue, as well as long-term care, right? So more than 15 years after retirement. So so these are the things that I just wanted to kind of share. Again, this is part of a larger presentation that I did, and I'll share a few more tidbits in the chat. But as an example, 72% of women aged 85 or more are already widowed, versus 36% of men. And that just goes to show that, most of the time, women outlive men. And that's also why we tend to speak to women more often about long-term care coverage. And then, the other thing that we discussed in this overall presentation was, what are the differences in how people are prepared for retirement, so the people who are much more purposeful in having a plan to retire, they tend to retire when they chose to, when they wanted to. They probably have a will, they have an estate plan. They most likely work with a financial advisor. And they started planning for retirement a lot earlier. And so, we emphasize the importance of starting early, and it's never too soon to start thinking about retirement savings, even if you're in your 20s or 30s. Any questions?
Thank you very much, Guillermo. Very good information. Let me check the chat, see if there are any questions.
I have a question.
Sure.
What exactly does insurance companies look for with long-term care insurance?
Wow, great question. We were just having that conversation earlier. So the underwriting process is distinct than life insurance. We're not looking at mortality, we're looking at mobility. So as an example, I happen to be handicapped. I could never get approved for long-term care, even though I'm in overall relatively good health, because I'm a fall risk. So it's mobility. Do you have anything related to arthritis, anything related to your joints, things like that. So it's mostly related to mobility. The key thing with long-term care insurance is you can apply as early as in your 40s, and you can lock in a really good premium. But folks who come to us already in their 60s and 70s are expected to pay a pretty hefty penny. So the insurance companies, basically, they're banking on. So in life insurance, the insurance company is banking on you living longer. In long-term care, the insurance is banking on you not becoming disabled. So I hope that answers the question.
Thank you very much, Guillermo. Can you please add your information in the chat? And we're now going to take a 10-minute break before the second half of the webinar and our second panelist, the introduction of our second panelist. Thank you.
Vernell, are you there?
Is who here? Sorry.
Yeah, I'm looking for, okay, Vernell. What we,
Can you hear me, Opa? I'm here. I got 37% on my phone. I'm here,
Okay.
so, yes. Thank you.
Great.
Opal was speaking, but she was on mute.
We just wanted to introduce some of our guests that we have on really quickly, if we can, and thank them for coming.
Sure. Thank you, Opa. I'm going to give the opportunity for our audience to introduce themselves. Not sure what order we like to take in, but we can start with, I'm looking at it, so I'm going to start on top. Dr. Rosie Milligan, if you can go ahead and introduce yourself, give you a 20-second introduction. Welcome to our financial team webinar.
Thank you very much. My name is Dr. Rosa Milligan. I am an estate planner. And I'm glad to be on with you all tonight.
Awesome. Thank you.
And she's the mayor of South Central.
That's right.
Okay,
Okay, that's new news.
Yes, right.
that's news.
That's right.
Nice. All righty, thank you. Look to
That's
see
old
more-
news, Rosie.
Well, I know Rosie's been doing a lot in the community, so she is honored to be the mayor of South Central, right? Yes, most definitely. All righty, the next person, let me get Anna. Go ahead and introduce, give us a 20-second pitch, please.
Me?
Anna Tut.
Oh, she's a presenter later. She'll be introduced later.
Not a
All
guess.
right, okay, I'm looking at the screen, my apology. Okay, well, let me move on to the next guest. I'm looking at the screen, I'm not looking, like.
Yeah,
okay.
Ruth Ross or Diane.
All right, thank you, team. That's what we talk about, teamwork. Help me out, don't let me hang. All right, thank you. Okay, so the next guest, go ahead and introduce yourself, and that will be Ruth Ross.
Greetings, everyone. My name is Ruth Ross. I'm located in the Inland Empire, and my company is DeFleur Designs. I have a line of versatile apparel for plus size women, especially statement jewelry, and I just started a new hair care line. And I think I met you, Brunel. Are you the lady that bought earrings for me at a couple of Dexter's events?
Yes, all righty, well, nice seeing you again. Thank you.
Yes.
Awesome.
Or talking to you, you can't see me. Bad hair day.
Oh, no problem. Okay, thank you for recognizing. Appreciate it. Keep up the good work. All righty. Tracy Williams, go ahead and give your 20-second pitch.
Hey, good evening, everyone. I'm Tracy Williams, and I'm President and CEO of TD Williams Consulting and Land Use firm. I specialize in building permit entitlements for zoning services related to city planning within the city and county of Los Angeles.
Excellent. All righty. And we have Diane Ferguson. And team, help me out because I'm on my cell phone, so it's different. If I miss someone, I need the team to pick up and make sure I get all the guests, please. I appreciate it.
Diane is a guest of mine. She may have taken her true break.
Okay, all right, we'll go to the next guest. Is that
Ruth
was that-
Ross. You have a Ruth Ross on?
Yeah, she already done her pitch as well.
Okay.
And
Michael Simmons?
yes, and there we go.
There's a phone number, 310 number. We don't know who that is.
Hi, this is
Okay.
Terry. Were you trying to reach me? I'm sorry, I was on another line.
No, you're good.
Okay, all right, thank you.
You're welcome. Okay, with the phone number ending in 4240, if you can go ahead and announce and give us your 20 pitch. We'd like to know who you are.
Don't be shy.
Well, we're gonna keep it moving. We're gonna make sure
Introduce
that we stay
Jean,
within.
introduce, Vernell, introduce, do you have Jean Clary introduce herself?
Jean
Vernell?
Clary.
Jean Clary.
Oh, yes. Okay, Jean Clary, thank you. You're at the top of the list. Jean Clary, go ahead and give us your 20-second pitch. Thank you, welcome.
Well, I'm a friend of Lorraine's, and I'm a retired teacher, and I'm becoming more and more concerned. I have a pension, but I'm becoming more and more concerned with my taxes increasing every year. And I really would like to find a passive investment, you know. So also long-term care insurance, I think it may be kind of out of reach for me now. But anyway, I'm here to learn and listen. And I appreciate the webinar.
Awesome. All righty, did we get all our guests?
Ardina Brooks.
Good evening, everyone. I'm Ardina Brooks, the founder and CEO of Designs by Ardina, and I create legacy art by preserving, bringing life back to old photos, as well as graphic design. But the main reason is so that you can continue telling your stories and pass them on from generation to generation. Thank you.
Vernell, have Michael Simon introduce himself.
Okay, Michael Simon, you're up. If you can go ahead and give your 20-minute, I'm sorry, not minute, second pitch.
20 minutes. All right. Good evening, everyone. My name is Michael Simon. I'm a life insurance broker. I specialize in final expense, but I do other types of insurances, but I just like to do more of final expense. Thank you.
Awesome. All righty.
Yeah, my guest on 4240 declines introducing herself.
Okay. Thank you. All righty, anything else, team, that I missed, or should we move forward, or has our 10-minute break has been timed already?
You can continue.
We have a couple of minutes to spare.
Okay, excellent. Well, let's see, who else we missed that we can get an introduction? Opal, you're not presenting, but go ahead and introduce yourself, please.
Good evening, everyone. I first of all want to say thank you for being with us this evening. A lot of great information, and we're going to keep it moving. My name is Oprah Price. I go by Jean, and I am an insurance broker. I'm with Insurance Solution Services. I've been in the business for over 35 years. My main goal when I reach out to my communities, business owners, individuals, is showing them how to protect your most valuable asset, which is you. I know a lot of us strive to grow our businesses, but you have to understand we're one situation away from not even being able to continue that goal or that desire, that dream that we have. I do medical insurance. I do disability, cancer, stroke, heart attack, all of those programs. I do long-term care and mortgage protection. So I've been doing a lot for the last 35 years. I love what I do, and it's all about trying to help you protect what you've created and worked so hard for it. Thank you for attending.
Awesome, thank you, Oprah. And we have one more, Dexter McLeod. Would you like to give a brief introduction?
I don't think he's still on the call.
Okay, all righty. Well, our break is about to end. I just wanted to kind of share, there has been some valued information that's been presented on this call about financial education. And, there's a lot of information talking about our ability to understand financial education. That's very important. We talked about wealth gap. We talked about generation wealth. We talked about preparing for our retirement and planning your finances. So, audience, take this information. It's very important to understand. We want to be able to make better decisions in our life and better judgments regarding our finances. So thank you, the panelists, one, for introducing and sharing that value information. I really appreciate the information. Make sure everyone put their information in the chat so we can all have the information that's needed to be able to connect. Connection is very important. All righty, so now we would like to, I would like to hand it over to, well, Opa, if you can also give the little pitch about the LA South Chamber of Commerce, kind of share a little bit about the LA South Chamber of Commerce, and we'll go into our next panel.
Okay, very good. First of all, I want to thank you again for attending tonight. The LA South Chamber of Commerce is, we're not your average chamber. One of the goals that we have is to show, our members how they can collaborate. We're all about collaboration and economic empowerment. We have several teams. The financial team is one of our biggest teams in the chamber. This platform allows us to communicate, collaborate our business, work with each other, and also reach out to our communities. The chamber's been around for a little over 7 years right now, and we are all about being into the community and the things that we know that the community needs. So, you'll find us on this platform every month. If you visit the website, you'll be able to see that we are a very busy chamber. We have, in fact, we have about 7 teams that we do webinars every month, or we're in person. So we want to thank you for joining tonight. Be sure to visit our website and check out the chamber and some of the events that we have coming up as well. I'm going to go ahead and introduce our next moderator, and that would be Lorraine McLeod. Lorraine McLeod has been with the chamber. She's one of our team directors. And Lorraine is also an insurance agent. And as you can see, this webinar is full of insurance agents and financial advisors. And so we have a lot going on. But Lorraine is one of our top representatives, and she is going to introduce our next panel. So Lorraine, you have the floor.
Thank you, Opa. Joining me now are our panelists for the second panel, and that would be Denise Ridley Davis and Anna Tutt. Now, Denise Ridley Davis is a licensed health and life insurance agent since 2008 and has been providing retirement planning, life insurance, and annuities for her clients. She's also been educating and enrolling individuals in Medicare health plans since 2018. Denise is also a certified financial planner. The second member of our panel is Anna Tutt. And let me tell you a little bit about Anna. Anna Queen Tutt is the president of Consolidated Board of Realties and the chief executive officer of Queen Tutt Enterprises. She's very active in the community, helping build generational wealth for over 13 years. So I'd like everyone to join me in welcoming our second panelist, again, Denise and Anna. Now, Anna will be speaking about, Denise's topic is Medicare and the impact on your finances. So we're going to start off by asking Denise a couple of questions and then getting her to expand on her topic. So Denise, your topic is on Medicare and the impact of your finances. So can you, share a little bit about what are the ABCs of Medicare coverage and what types of costs are involved in Medicare?
Okay, thank you for your introduction, Lorraine. I will start off by giving you some background and some statistics. The fact of the matter is that 10,000 baby boomers are turning 65 on a daily basis. And by 2030, 1 in 6 individuals living in the US will be over age 65. So that's a significant proportion of the population. Now, I will go into the ABCs of Medicare, and there is Part A, Part B, Part C, and Part D. Those individuals who have paid into Social Security at least for 10 years, they say 40 quarters, are automatically eligible for Medicare at age 65. And they automatically get the Part A, which is the hospitalization portion, covers the cost when you're in the hospital. The Part B, when you turn 65, if you are already on Social Security, it's automatic, but the majority of people are not already on Social Security, so they need to actually opt into the system. And once they opt in, the Part B, which is the medical outpatient portion, doctor's visits, lab work, they need to sign up for that at age 65. And they give you a period 3 months before, 3 months after your birth month to sign in. Otherwise, you are charged an additional penalty for enrolling at a later time. Now, not everyone is, it's not reasonable for everyone to sign up at age 65 if they are continuing to work and they have acceptable, insurance, health insurance coverage at the workplace. So there's an exception to that age 65, and there are other exceptions, but I'm going to present the more common circumstances right now. But at age 66, 67, if they've been working with good insurance, they keep that insurance and enroll when they're in Medicare, when it's about time for them to leave the workplace. So there's no penalty for those individuals who delay for that reason. Okay, that's an important point. So Part A, I will go over that again, is related to your hospitalization coverage. Part B is related to your medical care, doctor's visits, outpatient, lab, and x-rays. And Part C is a combination of A and B, and usually Part D, which is the prescription medication portion of Medicare. So I want to emphasize that Part C is usually a combination of Part A, Part B, and Part D. Okay, right. So the next thing I would like to talk about is the different type of plans that you can decide on when you sign up. Basically, when you have Part A and Part B, that's called Original Medicare. And if that's all you've signed up for, then Medicare pays 80% of your costs, and you're responsible for 20% of the cost. That's where your finances can be impacted. Many of you may be aware that bankruptcy, one of the primary causes of bankruptcy in someone's lifetime is often related to excessive medical healthcare costs. So taking a significant risk to just sign up for original Medicare, because life is unpredictable, and being responsible for 20% of a hospital bill, doctor's bills, is something you generally don't want to experience. So that part, so that would be original Medicare. The second plan type is Medicare supplement or Medigap. And that's part of the confusion, the different names for the same things. Medicare supplement is also Medigap, and that is A and B as well, but it does not include the prescription drug portion. That's an option that you add on separately. What is good about and attractive about Medicare supplement is that it covers the 20%, and it also gives you the option to go to any doctor who accepts Medicare in the country. So if you're 6 months here, 6 months in Florida, and you travel a lot, you can go to any doctor. You don't need any referral for a doctor who accepts Medicare. And oftentimes, people who have disposable income prefer that. They tend to go with Medicare supplement. But those who are on a budget and do not want their limited income to be impacted are more likely to go with the third choice, which is Medicare Advantage, the Part C that I mentioned, which is a combination of A, B, and D. Yeah, and it could, for veterans, they already have prescription plans through the VA, so they may just accept the A and the B without the Part D. So that's one of the exceptions. So for in terms of impacting your finances, those who have limited income would generally sign up for the Medicare Advantage plan, which means they need to stick with the doctors within a network, and they usually have a primary care doctor. And it's similar to an HMO, but there are different variations within the Medicare Advantage, where you can be in a network where you don't have to go to the doctors based on referral. So HMO, you're locked in, you're to the network, you need to be referred for a specialist. PPO, you don't necessarily need a referral. And there are other variations within the Medicare Advantage, but that's the simplest and basic form that Medicare Advantage takes. So that one other thing I want to mention is that some people don't sign up for the Part B. They feel that they're in great health, etc. They just go with Part A and take a risk. So that is another way that their finances may be impacted significantly. All right. So those are the main points I wanted to make at this time. If there are any questions now, or do we want to take it later?
Well, I have another question for you. And by the way, thank you so much for that very comprehensive answer. Now, one of the things that you mentioned as you were talking about the ABCs of Medicare, you mentioned that most Medicare benefits are you're eligible for Medicare at age 65. But in reality, some people or a lot of people are working at age 65. They're still working at age 65. So my question then would be, when do I start Medicare if I want to continue working beyond age 65?
Okay, well, that would be when you are ready to retire. If you have an employer and you have a good health insurance plan that includes dental, vision, and hearing, you would continue working. There isn't a set period of time. You could work until you're 70 something years of age. 80, we have politicians who work almost 90, 89. We're trying to get that person out of office. But, it's your choice. The main difference here is, main point in terms of when, is to avoid being penalized, to have an additional cost to the monthly premium. So if you stick within the guidelines, then you don't have a penalty. So if someone signs up late, then they add on to the monthly Part B premium. But there isn't any set age as long as you're working.
Mhm.
And if you don't sign up and you're not working, then when you decide to sign up, then if you are not working and you do not have insurance, is what I meant to say, then when you get ready to sign up, if it's late, then they add on a higher cost per month.
Mhm. So then
But
are
did
you,
that answer your question?
well, it led me to a further question. So, okay. So what I understand is this what you're actually saying? Now, a person is working at age 65. Are you still, even though you may have adequate a health plan from your job, let's say you're working with a company and they offer medical benefits, do you still have to sign up for at least Part A?
No,
Or you don't have to?
it's automatic if you have paid into Social Security for the required number of years.
Okay. So that's automatic.
Yeah, Part A is automatic.
It's automatic.
Otherwise, if you're not eligible, there's a premium for it. But otherwise, there's no premium for Part A.
Okay. Well, thank you so very much. Are there any other questions for Denise? This is very, very.
Yes, I have a question.
Hold
Okay.
on. Opa is first, then Delphine, Ardina, and then Terry. Just raise your
Okay.
virtual hand.
Okay, I'm gonna go ahead and waive my question because of our time. I'll go ahead and have Delphine ask her question. We'll go to Ardina and Terry really quickly.
Yeah, I just want to confirm, because I have a friend who's working and she's eligible for Medicare, but she said she registered anyway, but she's keeping her company insurance and everything, but she just went on and registered. Is that possible?
Yes, you can sign
Okay.
up and let them know that you're not ready to start.
Okay. I was just wondering because I didn't know that. It's a short and quick. All right, thank you.
Okay, Terry Larry.
My question is with respect to Medicare Part C.
Yes.
Is the cost significantly higher, or how does that work?
No. Well, let's see. I'm not clear. Part B. If you have original Medicare and you sign up for that, or Medicare supplement, or Part C, the Medicare Advantage, all of those you need to pay the premium, which is $165 per month. So all of those you would pay unless you qualify as a low income individual or have some other special circumstance. And
So-
that premium is also higher for high income individuals.
So it would just be 165 for A, B, and C.
Yeah,
Okay.
if you have the combined Medicare Advantage plan, which is Part C.
Right. Okay.
Okay, and for the other two, the original Medicare and the Medicare supplement, there would, depending on the plan, there could be an additional premium for a separate Part D, separate prescription drug portion. So they opt into that. And if they don't sign up for it, then they would have a higher cost at the time they start that Part D prescription portion.
And what if you're already like because of illness or something, you're receiving government medical care?
If somebody is disabled, for example, and they're already on, they can already be enrolled on Medicare if they're less than 65. That's a qualification, a documented disability that Social Security has accepted after being disabled for 24 months. So they can qualify if they're less than 65 under those circumstances.
Okay, thank you.
You're welcome.
Okay, go ahead, Lorraine. We got
Ardina.
Ardina.
Okay,
Denise.
yeah, thank you. And Denise, thank you, because you are my Medicare representative. Just wanted to say that.
No, thank you.
But I wasn't clear on part D.
Part D, the prescription drug portion, it's most Medicare Advantage plans include that with no additional cost. It's just part of the plan through that insurance company. Now, you may have a plan through Medicare Advantage that has a premium, an additional cost for the prescription portion. So it varies. There's so many variations with the different companies, even within one company, there are multiple different plans. But the more common plans are the zero additional cost plans where you pay just the Part B premium, $165, and with the Medicare Advantage, you pay no additional premium for the medical portion or for the drug portion. So does that answer the question?
Yeah, pretty much. But so the difference between the Advantage and the supplement
is that you pay another, starts around $150 per month to an insurance company as that would cover your deductible, that 20%, 80-20 I mentioned, it
Right.
covers that 20%. So, and also you get that additional choice of being able to go to any doctor who accepts Medicare, and you don't have to get referrals. But you do have to get a separate prescription drug plan. And it doesn't have to be with the same company.
Okay.
Okay, thank you very much, Ardina. Thank you very much, Denise. We need to move on to our second panelist, which is Anna Tuff. So Anna will be speaking on leaving a legacy to build generational wealth, which is a very interesting topic. So Anna, let's start with let's have you get started.
Okay, awesome. Thank you, Lorraine. This has been great information. If you look at all the information that we received, it's definitely directing you in building generational wealth. I know my time is I got to go fast, so I will go fast, but we always want to leave a legacy. And we've never taught how to leave a legacy, which is very important. So I am going to talk about building generational wealth and what that looks like in your family. We don't have that conversation enough, and that's very, very important. What does that look like in building generational wealth? And there's all types of forms of building generational wealth. You can build generational wealth by investing in stocks, investing in real estate, building a business to pass down, take advantage of life insurance, invest in a child's education, teach your children about personal finances, creating an estate plan, writing a will, setting up custodial accounts, and naming your beneficials. So as you see, our financial team, we have a little of all of this in our representation of our financial team. But I am basically going to talk about building generational wealth in real estate. But how many of you have conversations with your children, with your family, with your grown children about building generational wealth? By show of virtual hand, raise your virtual hand and let me know if you're having those conversations, if you're sitting down at the table having the conversation. Great. All of these vehicles here, we can definitely leverage to build generational wealth. One of my favorites is, and Dr. Rosie is here, who definitely can do a trust for you. A lot of times we don't understand of having all of these vehicles in a trust. And that trust is our legacy that we're going to leave so that we can build generational wealth. So because I'm just talking about real estate, I'm just going to get into that. I'm not going to get into the others because of sake of time. But when you talk about real estate and leaving a legacy, why do we say real estate? Real estate is long-term. You know, you have long-term appreciation. You might have a downward market. So we know 2008, the market went down, right? We had the crash. So everyone is hysterical. But if you held on to your property, look at the property values now. We can see properties that was at 300,000 are in the millions. And some of us are looking like, what? You look at the properties in Watson, you'll say, those properties are going for 400,000, 500,000. That's appreciation. And so how do you leverage that? That is important to understand, to hold on to your property and leverage it so you teach your children. Now, if I buy income property, I can gain passive income. I heard someone talking about passive income. What does passive income looks like? Passive income means that I can collect a check, I invest once, and I can just collect some checks, right? So if I have income property, I can go around and collect the rents. I am what? Collecting passive income. So through real estate, owning multiple properties, so having units, or if you have more than one single family home and you live in one and you may have 4 other properties, you're going to collect what? Rent. And that's important. Now you heard Denise talk about the Medicare and Medicare. That is important to know how to leverage. That's why you want to have your properties in a trust. And I cannot stress that enough. Make sure you have that your properties in a trust. If you have your properties in a trust, what are you doing? You're getting the chance to leverage, telling your family how to handle the legacy, passing that legacy down from one generation to the next generation to the next. Even when you're gone, you're giving instructions to your family. So for my kids, my grandkids, my great grandkids, and so on, that legacy is continuing on, right? What's your last name? Everybody put in the chat your last name, and I want you to say CEO of the McLeod Inc. CEO of Davis Inc. So I want you to start thinking of your legacy like that. Every time that you're doing something, think about your legacy, okay? Another thing for building generational wealth and owning property, owning real estate is tax advantages. I heard someone say, she was talking about her retirement and she was talking about she want to stop getting hit with the taxes. Owning property helps you to have tax advantages. That's building generational wealth. So instead of paying Uncle Sam $2,000 every year, I can put that $2,000 in my pocket or in my trust fund account for my family so that I can build generational wealth and build that income to do what? To buy more properties. Because what did I say? Properties, what? Appreciate. Appreciate means that what? You're going to appreciate with value. You're going to appreciate with money, right? That's putting it in the bank. And you say, hey, my interest rate on the bank is what? Like, in a year, you might get how much interest? $10. But with real estate, you're gonna have hundreds of thousands of dollars, right? Right? Everybody say yes. Put in the chat, say yes or thumbs up. So it's important to know to leverage. And Terry Larry is on the a part of our team, and she's into she does taxes, and she can definitely contest to this. This is how you're able to save on your taxes. So if I have a single family home, I get to itemize with the Schedule A. But if I own a single family home and I have income property, then I get to also use the Schedule C, and I can write off everything on the income property. So that's more money that I'm putting where? In my pocket. So one of the ladies here, so she talked about she wanted to save on her taxes. That's another way for you to be able to save on your taxes. That's diversification. This is very important. And I know Guillermo, he talks about that insurance and leverage. And that's where you can know how to diversify your portfolio, your real estate portfolio. If you have stocks and bonds, you'll be able to know how to diversify that so that it can build wealth for your family. Leveraging real estate. A lot of times I tell all clients, don't buy property and then you take the equity out to pay off your debt. No. Everybody say no. Put no in the chat. Do not use your equity to pay off debt. You need to understand how to leverage the property, leverage your equity. The equity should be used to buy what? More property, so you can have what? More passive income, more tax advantage, okay? So put in the chat, I wanna make sure y'all paying attention. Do not take your equity out to pay off debt. You got that? I want you to be educated. So you go to a credit counselor or you call me so that I can get you educated on how to handle your money. That's a whole nother segment. One of the things that property also helps us with, we know inflation comes, right? And we get scared, everything is going bananas. But if you look at real estate, and you can look at, even though we like we're heading in, and you see the properties, right? But the properties are still what? Going up. So people have equity. So someone who bought their property 2 years ago, I have a client, she bought a property 2 years ago. How much equity she have now? It's like, I think $200,000 worth of equity. So even in an inflation market, you can still be building and increasing. But you also need to understand, let's say if the properties go down, what do you need to do? You need to hold on to your property, because what goes down going to come back up. You've seen that in our market term. Another thing, leaving a legacy and wealth transfer. This is very important, and that's why you want to trust, so that you can transfer that property. When you decease, you don't have to go through probate. You're saving money for your family, but you're leaving a legacy. I told all of you to put in the chat your last name and CEO, or put the last name in your trust. So McLeod Trust. That is leaving the legacy for your family. Put in the chat if you own a trust. I'll be able to look at it. So if you don't own a trust, don't put it in there, but put it in the chat if you own a trust. And it's important to leverage so that you can build generational wealth. This just talks about the benefits of home ownership. Most people who own their home, you know, they have a sense of pride. They're more happy because it's their own. You know, when you rent, you got to answer to someone else. So sometimes it's a little burdensome. But when you own, it's yours. You have a sense of pride. You have a sense of like you feel like you belong, or you achieved a goal. So you're a little more happier. Like I told you, tax savings, appreciation, equity, and grassroots. That's very important. And when you own property, you get a chance to be in a better areas for education. And that's important for our students. That kind of is my information here, but I know I'm trying to make sure I stay in time, because I had a little note saying that we ran behind time. But I want you guys to understand, in building a legacy and building generational wealth, we have to look at how do we handle our money. Because I hear a lot of times when I'm talking to clients or potential clients, I don't have down payment. My credit is not up to par. So it's about education, but it starts with mindset. You have to believe in yourself that you can. Number two, you have to believe in your family. What kind of legacy am I going to leave? Maybe your parents didn't own and your grandparents didn't own. Now it's time for you to own. But if we go back in time with our grandparents, they own, right? In a time where they had to deal with discrimination, in a time where if you was Black, they really didn't want you to own. So they put up the barriers. You couldn't buy across this block, or, you know, they had all these stipulations, but they persevere. So what I want to say to everyone, you have to persevere. First of all, believe it. Write it down, write your goals. What is your legacy with your family? What legacy do you want to leave? And talk to your family. Have conversations around the dinner table. Sit down with your kids, grown kids, little kids, whoever, and the rest of your family, sisters, brothers, because one of the things we don't think about is pulling together, coming together so that we can, I like to, where Dr. Rosie, she always say this, peace up. We don't want to peace up. Because what? We want to be in charge. That's the problem. But if we learn to work together, so let's say Ardina, Karen, and Denise, they're siblings, right? But they don't have enough money to purchase on their own. But if they come together, they can purchase. Now they can think even bigger. Instead of purchasing a single family, they can come together and buy a fourplex. So now each one of them live in the fourplex and then they rent out one unit, correct? As they constantly building on that property, what's happening is they're going to build equity as they constantly paying their mortgage. So now Karen is ready to move out. She has her credit in order. She saved some money and they have equity in the property. She said, I'm ready for a single family. So now they can help Karen be able to transition to a single family. And now you put another tenant in there, what you still building wealth, but you got somebody else paying your mortgage. And you do that, it's a duplicating process. We most of the time don't want to do that. We're going to say, I want my own space. I want this kind of house. You can't think like that. You got to change your thinking and say, I'm building generational wealth. What does that look like? What does that take? Because if you're renting already, you're living in somebody's unit, right? So why not live in your own? So change your mindset is very important. Also savings. I always like to tell people live off of 70% of your money, not 100%. I go to church, so 10% go to tithes, 10% to savings, 10% to investment, and live off of 70%. So what does that do for you? So like if Karen, Denise, and Ardina are siblings and their end goal is to buy more property and buy their own, they're saving. So every paycheck, they're putting that money aside so that investment account will grow. And if they talk to Guillermo, he's going to tell them, hey, use this vehicle to help your money to really take it to the 10X. So there's ways for us to look at it, but we got to start making those changes and making the changes of how we utilize our money and stop buying everything that fades away. We go buy the Gucci, we buy the Louis, we buy the shoes, right, women? We buy these shoes. I'm reformed. I went to shoe Alcoholic Anonymous, but we have to make sure that we change our thinking, take that money to build so that you can make more money and you can have passive income. I think my time is up. I don't have my clock in front of me.
I got you right here, Anna. Right
here.
here.
Okay, perfect. Okay, so that's just some tidbits. If you need more information, I can definitely talk to you. But I want everyone to understand that you can do it. Do it now. Don't wait. Don't look at and say interest rates are high. Play the game. Play the real estate game. Interest rates may be high now. When they go down, refinance and then get a lower interest rate. Understand, if you can do it now, I always tell people go ahead and do it because this is the best investment. This is how you're going to build generational wealth faster than anything else.
Absolutely.
Terry Larry have her hand up.
Okay, well, I'd love for us to do more questions. Unfortunately, our time has run out. What I do want to say is thank you to all of our presenters tonight. Delphine, Guillermo, Anna, and Denise. You guys have presented some awesome information. So I want everybody to make sure if we did not get to your question tonight, I hope you put it into the chat. I hope you have their information. There's all of their information in the chat. Make sure you get your questions answered. So we don't have enough time to go through those questions this evening. But thank you guys so much. I thank the guests that came on this evening. I know you got a wealth of information, and that's what we're talking about. The chamber and the financial team has enough information that we can present to the community out there. There's help here. I know Anna talked about us coming together and doing things together. That's one of the downfalls that we have. We talked, Delphine talked about the, loans, how we're behind in all of that. We're behind in everything because we choose not to work together. And that is the missing piece of the puzzle. We have to come together, work together. We have to collaborate with each other, our families. And this is what we're teaching our community, how we can come together and do better, move from those percentages that we talked about tonight, because they don't look good. Okay, so I thank you guys so very much. Make sure your information was in the chat, and we look forward to our next webinar coming up. Keep in mind, we do this twice a month. And we will be looking forward to talking with you again in June.
Once a month.
Excuse me? Well, there are enough, let me just say this, there are enough from the financial team. We do our webinar once a month. We have Guillermo that does a webinar. I do a webinar on insurance and how to protect your assets. So always tune in. And we will have more webinars coming up. So make sure that your information is in the chat. And we thank you again for joining us this evening. Thank you to the presenters. Thank you to our guests. You guys have a blessed week.